and welcome to Credit Reporting for Small Business. It's going to be pretty similar to what you understand about personal or consumer credit reporting, but there are going to be some laws that make a few differences in what you report, how you report it, and how you read them. So, welcome everyone. Can we go around and introduce ourselves? So, I'll start first. My name is Brenda Bryant. I am the owner of the Gale Group. I'm also an advisor for the Small Business Development Center. My specialty is finance, teaching people how to read and understand their financial data. So, who would like to go next?
Hi, Brenda. Can you hear me?
I can hear you.
Hi, this is Daphne. I'm at the gym, so I didn't. Sorry for the background noise.
As long as
But
you
yes,
exercise for me, I'm okay.
okay. But yes, my name is Daphne Moore. I'm the owner of Moore Marketing Agency, where we do your digital marketing, so all your social media platforms. And I am here to gain more information about building a strong business credit because I have cousins who are looking to start businesses. So I want to give them more of a professional input of what it is, as well as learn myself. So thank you for having me.
Great to have you. Anyone else? Okay, then let's get started. So, our agenda is very simple. We're just going to be going through the slides together, and we're going to try to understand the differences that are prevalent in credit reporting for small businesses, that it's a little bit different than what you do for consumers. A lot of people understand consumer credit reporting and they understand the credit scores, or at least they have knowledge of the credit scores of the annual um, credit score report that you can get, etc. So with business, it's going to be a little bit different, little bit more tweaking on what can and cannot be reported, and how that impacts the business, and also how it impacts the business's customers. So our ground rules are: you talk whenever you have a question, ask it. I don't want to wait until the end because you may forget the question that you have. If it is something that is going to be brought up during the course of this time together, I will let you know that. Okay. And we already did the introductions, and we're going to look more at how are we putting all this together. I hope you have your participant guide with you. If you do not, go back through this information and make sure that you read, because there's a lot of information that's in here. So some of the things that we're going to cover are the concept of credit reporting and the impact that credit reports have on your business. And that's not only the impact of business credit reports, but also personal credit reports. To help you identify the credit reports that are available and what reporting agencies that are out there. And that's going to be a little different also. Explain how credit reports work, identify the benefits of what a small business derives from a positive report, and managing its debts and obligations. And I think we probably already know that what a positive report will do for a business. To identify risks to a business from a credit related scams and frauds. And unfortunately, we are plagued with that much more than we really wish. And people are always trying to take someone else's information, take someone else's identity, take somebody else's money. And so we want to know how we can monitor that and then how we can mitigate that as much as possible. We also want to look at some common practices. What are the things that are available to us? And this may surprise you, but one of your biggest assets is going to be your understanding of what the federal government expects. And so we'll go into that. Identify strategies to build and improve credit, to improve your business's credit. Okay, so this is really looking at the business as a separate entity. But just remember that your personal stuff is always in the background. And then explain how the personal finances of a business owner impact the business's ability to get credit. So we'll talk about all those things as we go along. So I'm not going to ask you the question. I'm going to ask you a little bit different question. In credit reporting, um, which of the items that do you think don't appear on your credit report? So on your credit report, and this is talking about your business credit report, do you think unpaid lawsuits are there? Do you think employment is there? Do you think tax liens are there? Do you think credit reporting score is there? And do you think former aliases, other business names, are there? So think about that for a moment. And if you want to chime in, please feel free to do so. So when we're looking at what items actually appear on, yes, go ahead. Did someone want to say something? Okay, so if we're looking at things that appear on your credit report, unpaid lawsuits is most definitely there because that's about paying bills, okay? Paying what you owe. Tax liens are there. Again, that's about paying what you owe. Credit rating score is there because that's what monitors how you pay what you owe. The two things that are not there are employment, because that doesn't have to do with paying anything, or former aliases, and that doesn't have to do with paying anything. So your credit report is going to be attached around what you pay and how you pay it. And so just keep in mind, like I said before, that some of this is going to be stuff that you already know. It's going to make sense, and some of it is going to be a little different. So when we're looking at credit reporting, small business credit report contains information that is given by many, many sources. Okay, so they're getting stuff from the banks. They're and if you look at this, you'll understand they're getting things from where you have made payments. So they're getting things from the bank, they're getting from lenders, investors, landlords, other businesses, government agencies. Where have you been making payments? Okay. And the reason for this is that whoever it is that is looking at your credit, and it's usually somebody that you have asked for money. You have gone to somebody and asked for a loan, and they're checking to see if, in their eyes, you are credit worthy. That credit worthiness means that they're collecting this information because they're trying to figure out what your payment history is, if you have any liens against you, any judgments against you, collections, unpaid things that have popped up. Because what the funding organization, whether it's a bank or a credit union or you're getting a car loan or whatever it is, they're looking at, is this person going to pay me back for the money that I'm planning to lend them? So that's the whole purpose of looking at your credit report. And from a personal standpoint, that's exactly what happens. It also happens for your business. So this impact of this credit report is for somebody who's seeking credit. Okay, so that's you. Um, for the report can be used by somebody that, let's say you're going to the bank and you're saying, I would like to borrow $10,000. And so the credit report is important to you because you need to know this stuff before somebody else knows it. You need to know what is being said about you so that you can verify that that is true, or you can clean up if it is not. The person that you go to, the bank that you go to, and you're asking for money, they want to look at this too, because for the things that we talked about before, they want to be able to look at this and decide whether you are, in their eyes, a good risk. And then they want to see who's reporting this information. Okay, so who's putting this information into your credit report, and what you want to know, as well as what the funder wants to know, is this accurate? You always want to make sure that your credit report is accurate, which means that you need to keep track of what's going on in your world. Okay, so credit reports, um, when it's about getting started with your business, that you don't have a business credit report, because when you're starting your business, you don't have a business yet. You don't have history. You don't have business money history. You don't have business consumer, like things that you're selling to customers history, because you haven't started your business yet. So what the funder is going to look at is who's running this business, and who what is the level of trust that they can put in this person's ability to manage money. Well, since they can't do that against your business, they're going to look at your personal credit. So establishing credit with a credit reporting system in the name of your business is important, but business credit reports are going to be looking at your personal stuff as you are getting started. Now, once you start to have some credit history, then it's going to be looking at your business credit versus concentrating on your personal credit. And that business credit comes from extending credit to determine the terms of finances, suppliers, shipping companies. All these people are going to be reviewing this information so that they can make sure that you have what they need, which is that ability for them to say yes to the money. So your credit report, when you're looking at your business credit report and you start this process, and if you are in business, you've been through this. If you are starting business, please know that these are some of the things that you have to think about. When you go to get your business license, that has nothing to do with your credit report. Okay, that has to do with, in the state of Nevada, you get a state license which says you have the ability to open a business in the state of Nevada. You also have to get a jurisdictional license, which says my business will be run from this particular address, whether you are working from home or whether you're working from a brick and mortar location. That local jurisdictional license will say either I'm working my business from the city of North Las Vegas or from Henderson or Las Vegas or from Clark County. So that means that you have to get two licenses, one for the state, which says I can do business in the state, because you cannot have a local jurisdiction license until you have the state license. Now, the federal government says, well, because we want to keep track of how your business is growing and running, you need to get something from us. It is called an EIN. Here they call it a tax ID number, but the EIN is the tax ID number, and EIN stands for Employer Identification Number. It's kind of like your social security number that you have personally. This would be like the number that you have that's attached to your business. You go to the IRS, doesn't cost you anything, but you have to have that state license first because it's going to ask you questions about that. You can do that online. You can get your EIN, and then once you have that, then you can go to the bank and set up your bank account. Now, the other thing that you want to get is called a DUNS number. Okay, DUNS number stands for Data Universal Numbering System. Don't you love the acronyms? Okay. And so the DUNS number is something that you can also go online and get. And so once you get your DUNS number, you want to be a subscriber to the reporting service. And what happens that what keeps that number fresh and available, because funders go to look for your DUNS number and they look for the data that's there to help them decide if you're a good risk. So that means that you need to be feeding good financial information to the data universal numbering system. Okay. If you get confused by any of this, please talk to your accountant or talk to your business attorney. They will be glad to help you understand this in greater detail than what we're going to go through today. So, in order to ensure your most favorable credit rating, include your strongest and most established open trade line of credit accounts. Of course, you want to show the system that you are doing everything that you can to have a strong and viable business. Again, this is something that you want to make sure that you keep track of. You don't just, this is not a one and done thing. Okay. This is something that you always want to keep track of. You want to make sure that your business is in the best light. And so these these reports that are get are used by like funders who are looking for to see if they can fund you. They should be used by you to make sure that the information that you have is the information that is correct about your business. Now, the amount of information that you receive in an inquiry and the length of time the report is held for you is determined by the paid subscription package purchase. So be very careful. Do your research first. Find out what you need. If you're having trouble figuring that out, talk to your business attorney, talk to your accountant or CPA. So, when you are looking at this whole idea of business credit, this needs to, I'm going to answer these questions for you. These reports need to be helpful to your business. And the way that they're helpful to your business is that you're on top of them, you're monitoring them, you're making sure that the information is correct. And there are some challenges to credit reports, business credit reports, and we're going to talk about some of that. So a business credit report is going to include different kinds of information, and we've got a list here. So just like your personal credit report is looking at how, and I keep using the word trustworthy because that's a word that underwriters use. Underwriters are those people who say yay or nay to your ability to get credit. So a personal credit report is going to see how trustworthy you are in paying back that money you want to borrow, whether you're getting a house or whether you're getting a car, whether you're getting a personal loan, whatever. The same happens for your business credit. When you go out and maybe you're looking for a line of credit from the bank, or maybe you're looking for an equipment loan that you want to get. Again, they're going to be looking at the trustworthiness of your business. And in the process of doing that, then they have reporting agencies that they can go to that will provide a free business credit report. And so they may want some more stuff. Okay. So if they want some more information, they may have to pay for it. So this is a reporting agency will provide a free business credit report, but there may be a fee for things like um, a summary of your financials. Okay, whether they are and looking at your accounts. In fact, they may even look at some accounts that are not financial. They may want to go in and probe in public records or look at scores that other agencies have set up for you. Looking at your payment trend, like let's see, do you pay things on time, and are they paid on time consistently? So all of those things mean a lot as you are trying to show that your business is the kind of business that is can move forward and is productive and can pay back whatever loans that you may need. Now, one of the things that's interesting about this is you've probably seen two of these names before, Experian and Equifax. They do what is considered consumer credit reporting. That's your personal stuff. But they also have a business division. So you will go to Experian Business or Equifax Business. But the one that you've probably heard the most is Dun and Bradstreet. And Dun and Bradstreet is the place where most inquiries are made that say, okay, this is what needs to be happening in terms of how this business is running. So you want to keep an eye on all three of these agencies to make sure that they are reporting the correct information about your business. So the credit reporting agency is the place where you go and get information about your credit worthiness. You can go to, and this is something that you probably already know, you can go to annualcreditreport.com. So you can find all the contact information there, but this is for personal. Okay. So you will find Equifax, you'll find Experian, and you'll find TransUnion. That's for personal. For small business, if you can obtain a credit report on a consumer. So let's say that you want to give credit to someone who is buying something from you, then you become that person who's looking for that credit worthiness. You're looking at a consumer and saying, is this someone that I could trust who will pay me back in the time that's allotted based on our agreement? So one of the things that I mean, a lot of this stuff you can just go to the internet and do your searching. But again, if you get stuck someplace, please get in touch with your accountant or your business attorney so that you can make sure that you are doing this correctly. Now, if you get some, let's say I go to your company and I'm going to buy something and I'm asking you to give me an account at your company so I can pay this off. Like if I go to buy a car, I don't normally just put down, $30,000 in cash. I usually say, can you put this on an account? And they say, yes, we'll get a loan, etc. Right? So what happens is when you're the person who is trying to figure out if I am trustworthy, there are some restrictions that you have. Okay. You can get the information for yourself because you're doing this to check my trustworthiness so that you can decide whether you want to finance me for this thing that I want to buy from you. What you can't do is share this information with anyone else. So when you do that, that's a violation. Okay. And so you don't even want to get messed up. I don't even want to go into long detail about that. Let's just say, don't do it. Okay. So knowing the legal standards and regulations that you must follow is very important. If your business is going out there and they're looking at credit reports, remember that those credit reports are for inside your business, just to check how that consumer or how that person will be able to pay you back. So, what are some of the reasons that a business owner may have for reporting consumer credit information to a consumer reporting agency? Well, let's look at this on the positive side. Let's say that this person pays those bills on time. They pay what the agreement says. They're paid on time. You don't ever have to worry if it's due on the first, it's paid on the first. That's something that you would like to report to a credit reporting agency about your customer, because that's a very positive thing that goes into the customer reporting. So don't think of this as something that's always negative. This needs to be as positive as possible, but you want to report the truth. So when you're looking at reporting consumer credit and how that manages your risk. So reporting your that history with your customer to a credit agency gives other creditors notice of debts owed to your company. Okay, so it allows other firms to know that your customers total existing debt, and it shows that your customer is paying that debt off up at according to the agreement. Now, there's a thing called a ratio, and the ratio is the consumer, what the consumer and what the business credit raters look at, and they're looking at the debt to income ratio. They want to keep that somewhere around 45%. Okay, that's acceptable. 30 is better. And so it's going to depend on the income that your customer has and the amount of the monthly debt, including yours, that the customer has. So that's kind of how it's being rated. Understand, when it comes to you and your business, you're being rated the same way. Okay. So consumers who understand that they need to pay their debts on time and according to agreement, they will do so. And when they do that, then their credit reports will show that these are people who are quote unquote trustworthy from the standpoint of they will pay their debts on time. And we also want to make sure that our customers are not being treated inaccurately by anything that we're sending. So we need to make sure that what we send is the truth. It is according to how payments are being made, and it's according to what the agreements are that we have with a customer. So you as a business owner, if you obtain a report with an alert on it, okay, an alert will say that there is something that you need to be aware of. Be sure to contact your customer, um, and let that customer know that there is something on the report. It does two things. It makes the customer aware, who can say, "Oh, I didn't know that was there. Let me take care of it." Or, "Oh my gosh, that's not me." So then now that consumer can then go and get their own personal report and get that cleared up, because what you don't want to be doing is making decisions on inaccurate information. What your customer doesn't want is information that is inaccurate and out for others to see. So in that case, we definitely want to make sure that everything is true and valid, and we're looking at the right thing so we can make the best decision. So when we're looking at reporting to credit agencies, a business can report consumer information. This is about your customer, directly to one of the three credit agencies, and we know what those are. With that's Experian, oh excuse me, and that's TransUnion. Okay. And so we want to make sure that we have that information. We can go directly to them. Um, we want to make sure that um, one of the things that happens with us as a business is we want to make sure that we're taking care of our customers, but we also need to make sure we're taking care of ourselves. Now, representatives of a credit agency, oops, excuse me, representatives of a credit agency will guide you through the credit reporting process. Ask questions. They know what their process is. Let them teach you how to use their system. Okay. However, before participating in credit reporting, consider the requirements and costs in relation to your business needs. Is this a big amount of money? Is this something that you definitely want to make sure everything is okay? Then maybe you'll pay the fee to that credit reporting company to get the information that you need. If it is a small amount of money, again, it's back to making those decisions. You will have to decide if it's worth it or not. So the credit agency will also offer training to help you, and wants to make sure that you are complying with the laws and the regulations in reporting that information. And remember, when you get information about your customer, that is for your use in looking at the relationship between your customer and what your customer is doing with your business. So there are requirements to report directly. So small businesses are required to have a retail location to work directly with one of the three agencies. If you're selling stuff online, this does not apply to you. If you are selling stuff and you have a physical retail location, a brick and mortar place, this does apply to you. So home-based businesses, landlords, that kind of stuff, they don't have to deal with this. Okay. But to ensure that data reports are protected and information is not compromised, a retail location is required to undergo an inspection. And the inspection is going to check for, is this a secure business location with secure locks? Locks nowadays, for the era that we're living in, have to do with cyber, have to do with your data locks. It has to do with your cyber security. Okay. Do you have separate offices and rooms where you are keeping information separate from the rest of the company? Are your computers secure? Do you have some kind of procedures that you have set up? So all of this is information that you need to make sure that you are keeping yourself secure, you're making sure that your business is running well, and that you are also protecting your customers. It's kind of nice to know as a customer that businesses have to do this. As a business, you want to make sure that you know exactly what you have to do and how you do that. And again, you can go online, you can find this information. Government has a lot of information about this. They'll tell you exactly what to do, but I still recommend that you also talk to your financial person, your business accountant, or your CPA, and to your business attorney. So if you're reporting through a local or regional agency, if you're doing this through someone else, they become like kind of like a gateway for a small business, so that then you can, there are companies that do this. Again, do your research, make sure that this is a company that you feel comfortable with and know what they do, know how they do it, and know how much they charge, because that's going to have an impact on your decision of whether you want to use them or not. But just know that they are available. So you just like, oh my gosh, I got all this stuff I have to remember, or just something else you popped on me. Well, yes and no. You need to know enough that you can manage it because this is your business, but you also need to know who out there can help you manage it. So there are additional agencies out there that, and you know some of these agencies, employment agencies that will help you find people. Okay. So they'll do a lot of the stuff that you may not have the time to do, or you may not have the knowledge to do. They will also, there are agencies out there that will help keep track of your credit. Okay. They will keep track of what's going on. They'll make sure that your information is up to date. There are also agencies out there, and you know about these, that are correct collection services. And so if somebody has not paid you, then you can hire these people to go out and actually get the money for you. All of these come with a grain of salt. And the grain of salt is, do your research. Make sure that you are talking to people that you feel comfortable with, that ask questions. Questions are the biggest tool that you have in the toolbox. Ask questions. If there's something that does not make sense to you, ask them to explain it. If it still doesn't make sense to you, talk to your attorney, talk to um, your financial person. Don't sign anything that you don't understand. So when you are, this whole idea of credit is big from both the sides of where you want to keep your business credit above board, and you want to make sure that everything you're doing is correct, and that the information is not skewed in a negative way. You also have the responsibility, as you are extending credit, or if you are extending credit to a customer, you have that responsibility to make sure that that is very protected also. That this is not information that everybody in the office knows. This only goes to the pertinent people that need this information to make those good decisions. So, um, so credit collection, we talked about, helps businesses take legal action if somebody hasn't paid you. Okay. Um, and so usually with a credit collection service, there is a fee. With an employment agency, there is a fee. There's fees for, these are businesses. There are fees for anything when you go outside of your company. There are marketing agencies out there that will do mailing for you, that will do social media for you. There are companies that are very good at this, but do your research. What you want to make sure of is that there is as little negativity attached to you, and the real focus is you don't want any fraud. But the way things are going in our world right now, people are always trying to break into something to steal some information or to lock up information so you can't do your work. Make sure that you are as secure as possible. Review when you're looking at these different agencies, go look at their websites. Okay, contact them, ask them questions, make sure that you are comfortable way before you put down any money. So now we're getting into some of the government stuff. Okay, so there is an act that was done by the federal government called Fair Credit Reporting Act. And the Fair Credit Reporting Act governs how things are collected, how information is assembled, and how to use information about your customers from their reporting information. So anything that you got on them about how their bills are paid and so forth, this act is has that governing piece around it. So the agencies that gather that information are following the rules and regulations of the Fair Credit Reporting Act. So this act looks at the legal requirements for your business when it comes to the credit reporting process, from how you furnish information and how you use that information that you get. So, for instance, the law limits you when you request a credit report for a consumer. It governs how you may use that information. And as we talked about before, that information only goes to the person in your company or the department in your company that needs that information. It is not to be shared inside or outside of your business. This is a lot of information. So I know that you guys are going to really have to go through your book and read it. You're going to have to go through it more than once, to tell you the truth. Read it and try to just get a feel for um, what this business reporting is all about and why it's important to your business. Because your business is the one that you want to make sure the information about you is correct. Just like from a personal standpoint, you always want to make sure that the information about you personally is correct. So then there is another act that was done by the government called the Fair Credit Reporting Act. And so that looks at the collection, the collection, the assembly, and the use of the consumer credit report information. So this is what you're looking at as you are going to apply, offer credit to one of your customers. So what this does, it talks about the requirements for your business in this whole reporting process, from furnishing credit information to an agency to how to use the credit reports that you get. So, for instance, the law is going to limit you on what you can, when you request a report, it tells you how you use it. This act is going to have the guidelines for that. Okay. So consumers, your customers, and you, when you are a consumer, also you as a business, you have protections. And if you make a decision adverse to a customer based on a credit report, then you have to provide that customer with a notice that says, I did this and this is why I did it. I got this information from this particular credit reporting agency. That tells the customer then to look at that information and make a decision about what he or she wants reported. Maybe they need to go to that agency and say, oh, wait a minute, this thing that you have on my credit report, that was paid off. It was paid in full. That needs to be reduced or that needs to be removed. Or they need to look at that and go, oh, darn, I forgot about that. I didn't realize that was still there. Let me go take care of it. The whole point is that the information that you give to the customer allows the customer then to go back and make sure that the information about him or herself is accurate. So when you do this, you say also from what the government is saying, we're going to tell you all this stuff. We're going to tell you what you can and cannot do. And you go, oh gosh, I don't know how to figure this stuff out. Again, you can go online. This particular act comes from the Federal Trade Commission. Okay. And so you can just go look up ftc.gov. That's for Federal Trade Commission. That's their website. So you can go look that up and take a look at what they say about the Fair Credit Reporting Act. They actually do have something that you could download if you want. They have a PDF that you could download. So don't be overwhelmed by all this information. There is a lot of it, yes, but there's also a lot of information that you can get on your own that's going to tell, um, back up, support what you're learning here. So, how does this impact your business? It impacts your business because we want to make sure that the information that we get to make good decisions is accurate and fair. And if it is not accurate and fair, then we can't make the best decision because we're making decisions based on inaccurate information. So, the Fair Credit Billing Act, that's another one. Don't you just love this? There's a lot of stuff that the government is doing to try to level the playing field for both those who are asking for credit and those who are giving credit. The problem with most of us is that we don't know what this is. And so these are things that are happening in the background. People are saying and doing things that affect us, but we don't know what those things are. And we only see the result of the effect. We don't know why it's happening. So I want you to be very, very aware, both from the personal standpoint and from the business standpoint. Be very aware of what is being said about you. If there are things that you need to clean up, do so. If there are things that are inaccurate, make sure that those things are corrected. Okay. If there are things that you need to do to say, oh my gosh, I forgot about this, I didn't get this done, then make sure you do that. But the whole point of all of this information is that we want to have information that is accurate and correct about ourselves, our businesses, and our customers. So if you look at this Fair Credit Billing Act, it's just another regulation that has come down from the federal government to say that we want to make sure that the information makes sense. And so if something happens, if you have a consumer says, no, this is not right, okay, and then wants to request the proof of the purchase as part of their inquiry, trying to figure out what happened here and how do I get this corrected. Once the investigation has started, everything that you're doing with the customer stops. So you have the government says in their rules and regulations that you have a time limit to get back to the customer. Just like if somebody's saying something about you or your business, you can, when you tell them, no, 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 this is not right, they have to get back to you. Okay. So you want to, again, you want to level the playing field as much as possible so that the consumer has rights and can look at that and clean up whatever needs to be cleaned up. But the business has rights also and wants to make sure that that information is accurate. So there are other laws out there too. You've got laws that may be local laws, maybe municipal laws, maybe county laws, state laws, whatever. Again, that's part of your research to go out and find out what happens when there is something out there and you're asking for the customer's report, and now it's up to you to make sure that that information is handled correctly. Some jurisdictions may require that you provide a receipt to the customer that lists certain information on the receipt. Okay, so if the customer is saying, I did not buy that from you, or that's not the amount that I had, then you need to have an invoice or a receipt that says exactly what the customer paid for. And that's only fair. You would want that too if you were put in that position, right? So when we're looking at the personal impact on your business, remember that your business credit is going to be based on your personal liability because your business does not have a history yet. Once your business starts to have a history, then it will be based on the business's history and not on the personal history. But as I said at the very beginning, remember your personal information is always lurking on the side. It's always out there. So as a business, you want to make sure that you've paid your bills on time, you paid them correctly, you haven't been late. Now we know what we've just been through and what we're still going through. It has a huge economic impact on not only on us personally, but also on our businesses. And yes, there are people who have had late payments. And yes, there are people who could not pay their bills on time. And yes, there are people who paid less than the amount. But when you are looking at that, you want to make sure that that information that is said about you is accurate and that you have a reason for doing that. I think the biggest reason that we have at the moment is that we are still in the throes of the impact, the economic impact of COVID-19. It not only hit us physically, health wise, but it also hit us from an economic standpoint. It hit us from a mental standpoint. I mean, it hit us every way that it could. Um, I can't imagine that a lot of people had on their mind, okay, in 2019, I'm going to put this money aside because I'm about to lose my business or I'm about to lose my customers. We didn't have that in mind. We had in mind what happens next month. What are my goals for 2020? How am I going to get through a 5-year plan? And but in that plan, we did not have a pandemic included in there. So we know that as we look at these reports will be not stellar for many people because of what we have been through. They may not be stellar for us either because of what we've been through. Now, what do we need to do to start cleaning that up? So, if you are starting a business, understand that that personal credit score has an impact on you getting outside funding. And when I say outside funding, I mean this is funding from someone other than yourself. So if you're looking to go to a funder and you're asking for $10,000 or $50,000 or $100,000, you don't have a business backup. You don't have a business history. So they're not going to be looking at how well your business has performed over the last X number of years. What they're going to be looking at is how well you, the owner, have performed through the last so many years. Okay. So when it comes to your personal credit, and I kind of just beat this one too, like this is now a dead horse. Okay. Just make sure that you are keeping track of what's going on with you. If there are any things that need to be corrected, you need to get them corrected. Okay. You need to, um, and by the way, there are websites by the government that will tell you how to correct any disputes. There are websites by the reporting agencies that will tell you how to handle disputes. If you have questions, go to their support or their help and ask whatever questions you need to ask. You will probably be better at sending an email to support or to their help desk than it will be to try to call them. The nice thing about sending an email is what you get back is going to be in writing. Keep those emails. They are important. Not only do they tell you what you need to do, they answer your questions, but they also are backup if somebody else comes in and says, no, 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 you're not supposed to do A, you're supposed to do B. You pull out your email that says, your company told me I was supposed to do A and I did A. So just make sure that you always, and this is just a rule of thumb for anything you do in business, have as much in writing as possible and have a backup system. Okay, so make sure that you are taking care of your business and making sure that things are accurate and correct according to what your business is doing as you are starting out, according to your personal information. As your business grows, then it will be looking at the Dun and Bradstreet. It'll be looking at the Equifax. It'll be looking at the Experian business reporting. Those are for the business reports. They'll be looking at the they are people who want to do business with you, people who may be potential funders, okay? People who are checking on your business for possibly offering you a project, okay? So there are a lot of people who want to touch your information. Just make sure your information tells the truth about your business. When you are looking at, and we talked about nobody's, very few people are stellar after we've gone through all of this, you can actually do some things that will improve your credit score. So, I mean, the first thing that you can do is pay what you owe on time. If you have a problem with that, if you don't have the money coming in that can pay the bills that you have on time, pick up the phone and talk to your creditors. Send an email to support or help. Talk to your creditors. Let them know what is going on. This is not a secret. If you can't pay that loan payment and they tell you it's X amount of dollars and you don't have X amount of dollars to pay, you need to let them know this is not a secret. And I say that over and over because it's embarrassing to tell somebody, I can't pay my bills. But you know what? The only people you need to tell are the people to whom you owe that bill. You need to make sure that you can work out some kind of an agreement. Um, there are people who had car loans. And they looked at that and go, I don't have car loan money. What can I do? Contact the person, the company that is offering that loan and see what they can do. Maybe they can give you um, a grace period, like 3 months where you don't have to pay it. Now, you will have to pay it at the end, just means that that loan is pushed out 3 months farther. Okay. But that gives you some time to get on your feet. Maybe by not paying that car loan for 3 months, you can catch up on the other bills and you can start figuring out how you can bring more money into the household so that you can pay these bills on time. Your loans and your other bills, if you know, to rebuild that credit, you have to get back to doing what the agreement says. Minimize how often and how much you owe in relation to your credit limit. Don't overextend your credit. So, what the credit bureaus are looking at is somewhere in the vicinity of 30%. If you have a credit card, for instance, and let's say your credit card has $1,000 limit, they're looking at that credit card and seeing that you have no more than $300 that you are using on that credit card. Now, if you have to use more, and if you can, then pay them twice a month to keep that down to that 30% if you can. But that if we're trying to rebuild our credit, if we're trying to make sure that when somebody inquires, they can see that we're on that building road, then there are things that we have to do. Okay. You also want to look at um, getting new credit. Be very careful about that because every time you apply for new credit, that funder will go and look at where you are now. When that funder does that, that's called a hard inquiry. And a hard inquiry is something that is marked against you on your credit report. So because when a funder is looking, they're looking at that for the purpose of deciding whether they want to allow you to have their money or not, whether they're actually going to grant that credit that you want. And that may lower your score. You don't need things to lower your score, you need things to increase your score. So always comparison shop. Always look around there for, there's so many companies out there that offer all kinds of things. Marketing is really great, but marketing is not the truth that you're looking for. You're looking to find out what exactly do they do? How do they do it? What impact does it have on you? And how much does it cost? Okay. And then keep your older accounts and pay them off monthly. That's what we've been talking about. Make sure that you are paying those bills that you need to pay because we are in the building process. So there is a thing called a personal grantor, right? And so lenders may require that you be a personal grantor if your business is registered as an LLC. So if the loan is part of a program provided through the SBA, or if your ownership is greater than 20%. Now, what does that mean? That means that as a personal grantor, they're going to look for collateral from you, not from your business, but from you. Maybe the collateral is the car that you own. Maybe the collateral is the home that you own. Now, just be very careful about that. Make sure that you understand what this means. Understand what the implications are. Now, from a positive standpoint, if you go on and this is now a collateralized loan. Collateralized loan means that the funder now has some collateral behind the loan. It's not just a blanket loan with nothing there. So with that collateral behind it, it may be easier for you to get the loan. But there's also another side of this. Okay. And the other side are the disadvantages of being a grantor. Once you collateralize your loan based on your stuff, your car, your house, whatever it is that you're using as collateral, if anything goes wrong with that loan, if you do not make the payments like that you are supposed to make, you could lose those assets that you were using as collateral. So that's why you want to make sure that you understand what this is. You don't want to listen to the sales pitch. You don't want to follow the marketing. You want to find out what is real and true. Use your accounting professional, use your legal professional when you are trying to understand this information, because it is extremely important that you do this and that you know what you are signing up for, what the implications are, that that you have a guarantor, that you offer yourself as your collateral. And this is, don't think that this is unusual, because it's not. Okay. This is something that is used when the funder is looking at your past history, whether it's your personal history or whether it's your business history, and saying, I need something more that makes me feel comfortable to grant this particular loan or to share this particular money. So we already talked about, what are some of the challenges of being a personal grantor? The biggest challenge, of course, is those assets. Making sure that those assets that you put up for collateral, that they actually are still there at the end of the loan process. So Benjamin Franklin says that remember that credit is money. One of the things that we have to be very careful about, and I've had this happen in some of my classes, is that people think when they hold up a plastic card that is money. That's money to them. Okay, we're not talking about the card. We're talking about that credit, and that credit, um, the credit rating, the credit valuation, the good credit that we built up through the years. In this case, when Ben Franklin says this, it's money because that allows you to get the loan that you're going after at a rate that is most favorable to you. When your credit is bad, yes, it's money, but it shows that it's not, that money is not as secure. You still may get the loan, but you also may get a an interest rate that is much higher, because the trustworthiness is not as complete from the funder to what you're asking for from the funder. So all of this credit stuff is very important. If you are in a hole, if you are trying to build your credit again, take the time to find out how to build it correctly, and make sure that you follow the rules, because the rules matter. And when you follow the rules, the outcome of that is that it's easier to get a loan, and it's worth it because you can get it at a lower interest rate. Right now, with inflation going on, I don't know what a lower interest rate is, because I don't know what the current interest rate is. They're keep moving them to kind of protect inflation and bring it down. But just make sure that you are aware. If you don't understand this, if you're not aware of what this means, remember, the tool in your toolbox that has the most effect is ask questions. So let's look at some things that, as we've gone through this, I've gone through this, and I've gone through this fairly fast. And I know this is going to take some more thinking on your part. It's going to take some more research on your part. It's extremely important that you are in charge of your money, that you are in charge of what happens to you, not only from the standpoint of how you manage your credit, but also how that is reported. You always want to make sure that what is being reported accurately, and that you're on top of it, so that if you see something that is inaccurate, that you can jump on that and get that straightened out. If you see something negative on your report that is accurate, then make sure that you dig into that and get that taken care of. Okay. So, as a small business owner, your personal credit, how you handle your accounts, your loans, whatever, is very important. And especially if you are a small business owner with no credit history, that personal is going to be extremely important. Make sure that you can get your free credit report from annualcreditreport.com. You can get that once a year, annual. Okay. So, and you can get it for each of the three recording reporting companies. That would be TransUnion, Experian, and Equifax. So those are the three companies. When I teach about credit, I encourage my clients to get one, like get TransUnion in January, get Experian in April. Um, um, I mean, in yeah, January, February, March, April. That's for 4 months. In the fifth month, May, get Experian, and in um, May, June, July, August. So in September, then get Equifax, and that way you can be seeing what's reporting, even though you didn't get all three of them together. You can see on a consistent basis every 4 months you're checking. Every 4 months you're checking. You can't do that if you get all three of them once, because it's annual. So when you break them up and you get them every trimester, then what you're getting is the next trimester it starts over again. You go back to TransUnion, etc. So that's another way to kind of keep an eye on your credit. Also understand that each one of these reporting agencies, um, they have their own method of reporting, which is one of the things that you want to learn. You want to learn how they report their information, because if you have all three of your credit scores, they will not say exactly the same thing. And so, what you want to make sure of is understanding how each one of these reporting agencies re- they gather the information, how they put the information together. And then when you look at this, it gives you a better idea of where your standing is. You want to establish a credit history for your business. It's extremely important that your business has its own standalone credit information. And you do that by getting your EIN number from the IRS, that tax identification number. That's the whole purpose of your EIN, is that goes on your tax form. Also, make sure that you have a business account. Now, I recommend that you have two business accounts. You have a business checking account, you have a business savings account. As your business is growing, when you set up your spending reports, or when you set up your analysis of how you're going to spend money, or you set up your budget, make sure that you've put into that budget money that goes into your business savings account. I always recommend that it is 10%, but as a new business, may not be able to put in 10%. I know I wasn't. And so, but I needed to put in something. So I took a dollar amount and I started putting it into that savings account. Now, why did I do that? Because I wanted to build the habit of saving. That money needs to be put aside. And there is a quote I keep saying it's Bill Gates. I think it was Bill Gates who said it, but I'm not sure. That anytime you want to borrow money, borrow from yourself. If you need to have a $10,000 loan to buy a piece of equipment, for instance, and you have $10,000 in your savings account, you have two choices. You can take the $10,000 out of your savings account, pay for that piece of equipment fully, and then pay yourself back that $10,000 just like you would if you had borrowed the money from a funding organization, from a bank, from a lender. Or you could go to a lender and say, I would like to borrow any amount up to 10,000 because you've got the 10,000 sitting in your account. So maybe you say, well, I'll take 5,000 out of my account and I'll borrow 5,000. Do you think that the lender would look more positively on you because you have also put some skin in the game? Okay. So the lender says, oh, well, you're going to pay for half. So we'll lend you the other half because that $5,000 is still sitting in that savings account. If anything goes wrong with this loan, there's that collateral. We can pull that $5,000 out of that savings account, okay, or whatever else is due on the loan. Or you can go to the lender and say, I would like to borrow $10,000. I will pay you back your $10,000, but I'd like to keep my savings where it is. So by having your own business savings account, it gives you more strength when you go in and talk to a lender. So a lender is looking at what your credit looks like. They're also looking at what are you doing for your business? How is your business handling what's going on with it? Okay. And then you also want to make sure that you have copies of your business credit report. We already talked about the personal. Business credit report is going to come from Experian Business, Equifax Business, or Dun and Bradstreet. I'd recommend get it from all three. Again, just like you want to get from all three for your personal, get from all three for your business, because again, you want to make sure that what they are putting down on paper is an accurate description of what's going on in your business. Excuse me. So you have to make sure that your business is being portrayed accurately, professionally, correctly. You don't want anything on your record that is negative to your business. And just like with your personal report, if you find anything negative, go find out what it is, do the research, and start playing cleanup on your business report. So if you want to make sure that the information that goes to the reporting agencies is timely. Okay? And so it's going to be accurate and it's going to be timely. You want to make sure that your customers are getting the accurate, timely, most current information about how their financial relationship with you. Just like you're looking for that when you have creditors out there, whether they be for personal, whether they be for business, you want them to be accurate and timely. And you want to make sure that that information is the correct information. All right. So the other thing is that you want to be aware of and you want to follow all the laws. And then I told you there's a bunch of them. But that's the one reason that you want to do your research, go to the government agencies, take a look at it, at what they've got there, all the different kinds of things that they have available. But also, you want to make sure that that you're following the rules and regulations that are put out in front of you, because sometimes they make perfect sense to the person who wrote them and they make no sense to the person who has to follow them. Use your financial professional, use your legal professional. When you have questions, go to the websites, use their support information, use their help desk, ask whatever questions you need to ask. Make sure that you understand what needs to be done. Don't just jump into something, oh, I can just pull this person's credit information, or um, and then not know what you can legally do with it. So just make sure that you're taking care of your business and you're taking care of your customers. So that was a lot of stuff. Okay. And I know that some of that was kind of um, a lot to handle at one time. So, does anybody have any questions? Okay, so I'm not hearing any. So let me say that I know you didn't absorb all of this at once because it's a lot of stuff to absorb. Please use your um, participant manual. It is full of very good information. Please go on to the internet and do your research, because it is extremely important that you are feeling comfortable with the decisions that you make about your business. Credit is a big deal. Okay. It doesn't happen by osmosis. It happens because we keep track of it and we watch it ourselves.
Brenda, there's questions in the chat.
Oh, I can't see the chat, so you have to tell me what they are.
I see one that says, "What about when creditors don't allow payments and want you to pay in full, but you're unable?"
Okay, so then I would definitely talk to my business attorney, or I'd even talk to my financial professional. Um, Also, look on the website for in the government agencies. I think it's under the FTC, which is the Fair Trading Commission. I think that's where you'll find the information about what creditors can and cannot do. The truth is, if you don't have the money, they can't get the money. It's just not there. But what they can do is say things about you that make it difficult for you to continue to try to take care of yourself. And that's the thing that we don't want to have happen. So ask as many questions as you can. If they keep saying no, you can also check with the ACLU, and that's I don't remember what the acronym stands for, but that's a legal professional organization that will reach out to help people. Any other questions? I hope that answered that one. So let me know if it did.
And I see another one that says, "What's the best way to start establishing business credit?"
Pay your bills on time. That is the best way to establish credit. Pay your bills on time. And if you have enough money, like let's just say you have a credit card out there, um, if you are paying your credit card, if you're paying the minimum payment on your credit card, that shows that you pay your bills on time. If you want to get a boost, if you have some extra funds that you can add to the principal of that credit card payment, do so. Because one of the the ways that credit card agencies are looking at your credit is that ratio between what the limit is on your credit card and how much you have used. So if your credit card is $1,000 and you're using 300 or under every month, that keeps you in good stead because that's keeping you at 30%, and that's kind of their benchmark. If you have $1,000 credit and you went out and bought something for $900, okay, that's 90% usage. That's not 30% usage. One of the ways that you can get around that or help you to have a better rating is if you can pay your credit card more than once a month. So you don't have to wait for the statement to come in. You can actually, if you buy something, maybe you just bought it on credit because you wanted the airline miles. Okay. And so you paid this $900 on your credit card. You're going to get your airline miles, but you have the $900. Pay the $900 to the credit card company immediately. Do not wait for the statement to come. So those are just some little tips that, and credit, I use credit card as an example because that's usually where the bulk of the problem is. It's just trying to keep our credit cards under control. Any other questions? Is that no other questions?
I have a question.
Sure.
So just to confirm, like the my business cell phone line, is that being reported? Those monthly payments?
They're being reported someplace. And I don't know if they're being reported on your business credit or on your personal credit. So what you want to do is find out.
Okay, because when opening it, they did ask for the EIN and to bring that
Okay, then it's going to be
in.
reported on your business credit.
Okay,
Mhm.
and I was also told, like, I think you covered it. Like another best way to establish the credit is those net 30 accounts, like Uline and um, vendors like that. Is that correct?
Um, when you're working with a vendor, you want to be very clear on what the vendor expects from you. So if you're working for a vendor that says, I can extend credit for 30 days, at
Mm-hmm.
the end of 30 days, this needs to be paid in full, then that's what you have to go by. If you're working with a vendor who says, I can extend you credit, but if you go past 30 days, I'm going to have to add a finance charge to that. That's the penalty for not paying in full, just like your interest rate on your credit card is a penalty for not paying in full. Okay.
Mm-hmm.
So whenever you're working with a vendor, you need to be very clear on what it is that the vendor is expecting from you. Just like you do with anybody else, when you're taking their money, you need to know what their rules are. If you don't like their rules, don't take their money
Mm-hmm.
because it's their money, their rules. So make sure that you are very clear on what that means and how that is going to affect you. And also look at your spending practices. How are you spending money within the business? Is there some place where you can curtail to make sure that this is a new bill that you're getting, that new bill can be paid?
Mm-hmm. Okay. And one last question:
Sure.
when um, building your personal credit, um, and being added to someone's account that's well established as an authorized user, just to
Hmm.
use that, does it start, like, for example, if they've had that account for 10 years, do that reflect, or does it only reflect from when I was added as an authorized user?
No, no, that gives you some credit history
Okay.
because the lender is going to look at that and go, well, if you don't pay, we know we got this other person.
Oh, okay.
Okay. So yeah, it gives you a leg up. But what you definitely want to do is make sure that that is paid, that you not only keep the respect of the person who allowed you to do that, but
Mhm.
also that you build the respect of the company that you're paying. And then you can pull away from that. Once you have started to establish your own credit, it shows that you are reliable, it shows that you pay your bills on time. Then you can pull away. And now that person doesn't have to be attached to you anymore. You are now standing on your own.
Pull away as in be removed from that account?
That you become removed and
Uh-huh.
get an account of your own. Because
Okay.
now the lender can look at that and go, oh, well, I can see that I know this was for this person, and so that was paid. Yeah, you can, and you talk to the lender. Hey, I would now like to have an account in my name or in my business's name now. And they've got some history.
Mhm.
So now they've got something that they can actually look at and say, okay, that makes sense because we see the progress that has been been made. We see the process this person is using, that they do pay, and sometimes they pay ahead of time, sometimes they pay twice a month, or sometimes they'll buy something and they'll immediately pay it off, whatever it is. But
Mhm.
they now see some history that doesn't show that you are negligent in any way.
Okay. Thank you.
You're welcome. Anybody else? Wasn't this just the most fun module you've ever had in your life? I know this chokes people. This one is a rough one, okay? But this one is an important one, not only for your business, but also for you personally. The bottom line to everything that we have done is make sure you know what other people are saying about you, and make sure that what is being said is true and accurate. So I am actually finished. And if you would like to have some extra time, these are the things that we've talked about today. You've got a book that I highly recommend that you take a serious read with. This is not something just to look and finger through. This is something to really take point by point by point. Use the internet. Go to the government agencies because they write out everything. That doesn't mean that you understand what they wrote, but it does mean that you start to read this stuff. And if you don't understand it, ask a professional, a financial professional or a legal professional. What does this mean? How does this affect me? What happens when if I do X, what's the implication? It's not just solving an issue, but it's solving an issue and making sure I'm not making another one with my solution. So, bottom line, the best tool you have in your toolbox are the questions that you ask. The questions that you ask need to get answers that you understand. You don't need answers, you need answers that you understand, because you have to take that information and turn it into some kind of action. If you do not understand it, the action that you take may not be the appropriate one. So if there are no other questions of anyone, I want to thank you for joining us today on this journey through credit reporting for your business. I think it was excellent information. I could say that because I taught it. But I think it's excellent information because it opens your eyes about the things that you need to be taking care of when it comes to your business. Also, if you have any questions about this, um, check with the chamber. They have all my information. You can always contact me. So, if nothing else, I'm giving you back some time for today Please enjoy the rest of your day. Take care.